Hello ladies and gentlemen, welcome back to the channel. Today we are going to be taking a look at and breaking down a stock that I have had my eyes on over the course of the past couple of months, and it's kind of become in a really interesting spot, as you guys will see from analyst ratings, as well as there is also some things about it that I want to point out that could be potential red flags. So let's go ahead and get right into it. If you guys haven't already, go ahead and hit that like and subscribe button. The continued growth on this channel has been amazing, so let's continue it. I know a lot of you guys who are viewing this video right now aren't already subscribers, so let's go ahead and make that change and hit the subscribe button. And we'll get right into it. So today we're looking at AMC stock. If you guys don't know what they are AMC Theaters is a multinational or multi-nation owned movie theater chain headquartered in Leawood, Kansas, and is the largest movie theater chain in the world. Founded in 1920, AMC is the largest share of American theater market, ahead of Cineworld and Cinemark theaters. So essentially what it is, it's a movie theater chain, and I'm sure they have some where you guys live, but I know they're very prevalent around here as well. So right now, as we look, if I can find it real quick, AMC Entertainment. So it is right around $9.40, and there's a couple reasons why that's interesting. Is because of the fact that it is a relatively cheap stock. You know, that's about the price of a Ford or something like that stock. And you scroll down and you look at the dividend yield of 6.51%. And matter of fact, let's go ahead and look at the AMC stock payout ratio. See if we can't find this real quick. So during the past 9 years, the highest dividend payout ratio was 1.95. The lowest was 0. The median, so that's not necessarily what we're looking for. Let's see if this can be it. So the payout ratio is negative 100.78 or 76. So I'm not 100% sure about that one, but let's go ahead and move on from there. That would have been nice to see, but I don't think it's listed anywhere. Has a market cap of about $1 billion. So this is a very high dividend yield on a stock like this. And I wish I had seen the payout ratio on this, because that would make things even more interesting, or potentially less interesting. You know, if it's a 85% payout ratio, then that's obviously something you guys don't want to see in a stock like this that may be potentially struggling. So let's look at over the past month. It's come down from about $10, and over the past 3 months it's come down from about $12. Over the past year, its high was about $20, you know, so pretty good. And then even over the past 5 years, its highest point has been 32. I think that said 36, maybe 33. Okay, so about $33. So over the past 5 years, it's lost about $12 of total value. So really interesting. And then you look at the analyst rating, you got a 58% buy, a 42% hold, and a 0% sell. So I think the biggest reason why this one has been sliding is because it's been missing its earnings marks by quite a substantial amount. You know, it beat it there slightly, lost, beat it there quite a bit, lost quite a bit, and barely beat it in Q2. I don't think they've released their Q3. As you guys see here, available November 7th. So I believe that's when they're going to announce their earnings this quarter. So it'd be interesting to see, and that could potentially shoot the stock way down, or it could potentially shoot it way up. So let's go ahead and look at the financials of this stock. As you guys see, a market cap about $1 billion, earnings per share negative 0.62. That's not something you want to see. As you guys see here, November 7th, the range, the volume, the 1 year target estimate is $15. So you know, if you're basing it purely off of this, that's a great buy-in point for the stock like this. You know, you could invest a bunch of money in this, and if it goes up $5, you know, you did fairly well. People believe it's a fair value on this stock. In the short term, it should be positive. In the mid-term, it should be down. Long-term, it should be down. So there's just some of these flags that I don't like to see on a stock, even though it has become kind of interesting to me. So let's look. Gross profit has been about $3 billion. Total revenue about $5 billion. Total operating expenses of about $3 billion as well. Operating income, net income has been about $10 million in losses. Excuse me, my voice is still recovering. So that's certainly not something you want to see. I mean, they did recover from here to here, so they're definitely moving in the right direction. But when you see something like that, that isn't necessarily something you want to see from a company that has been established for a decent amount of time and has such a large share of the overall market. And then this is where the problem lies. Total cash, $313 million. Total current assets, $781 million. That's not too bad. But then you scroll down here, total assets, about $10 billion. You keep scrolling. Total current liabilities, about $1 billion. Total current liabilities, $8 billion. And I believe there was a debt section, long-term debt of about $4 billion. And then you look at total cash, and it's only $313 million. Right here, as you guys see, that is certainly something that, they're not going to be able to pay off that debt super easily, unless they're selling assets and unless they're doing things such as that. And obviously that's not a good thing. And that's probably the biggest red flag to me, the amount of total debt that they have. And hold on, here's goodwill. How much was the total debt? Was the total debt in the goodwill? No. Okay, so that's different. So they've donated quite a bit of money. But that also goes into their total assets. I mean, that's probably one of the bigger portions of this. So they don't have a lot of cash on hand, and that's a problem when you're looking at a company that's got a high dividend yield. As you guys see, net income in the negatives, as we talked about earlier. Free cash flow, negative 185 million. Negative, positive slightly, and positive. So, I mean, they don't have a lot of good cash flow going on, and that's certainly not something you want to see when you're looking at a dividend stock like this. Let's go ahead and take a look at it, analysis real quick. So some people have it as a strong buy, some people as a buy, and some people have it a hold. How accurate that is, I'm not 100% sure. As you guys see, people are starting to upgrade it. So we'll see what happens with the stock. I don't know if I do invest in this stock, it's not going to be a whole lot of money, and because there's just a lot of uncertainty surrounding it. If nothing else, you'd get a decent dividend yield. I don't see it going underneath $8 necessarily, but given the current state, I could be wrong. They could eventually cut their dividend because of the fact that they have so much debt in comparison to free cash. So you guys will have to let me know what you guys think of the AMC stock, AMC Entertainment, in the comment section below. Do you guys own part of this? Do you guys like AMC, or do you guys think it'd be a bad investment? Let me guys know, and go ahead, like I said earlier in the video, if you haven't already, like, comment, and subscribe. And until next time, guys, happy investing.